The lure of the banking sector continues to tempt India's large corporate houses. On July 26th, automobile major Mahindra and Mahindra acquired a 3.53% stake in private sector lender RBL Bank for 417 crore rupees. In an exchange notification, the company said that it could consider further investment subject to pricing, regulatory approvals, and required procedures. However, under no circumstance would it exceed 9.9%. In a separate July 26th exchange filing, RBL Bank highlighted that RBI's prior approval was mandatory if a shareholder wishes to acquire 5% or more of the bank's shareholding. The bank also said that no such application has been received till date. The filing came amid media reports that the Mahindra Group could be seeking a larger strategic stake in the bank. So, with M&M also jumping on the bandwagon, why have India's big businesses been keen on entering the banking sector in the first place?
Worldwide, large business houses somehow or the other have that aspiration of owning a bank, and it's a highly leveraged business. Because on a capital adequacy of about 12 to 13%, the rest is deposits, and it's a leveraged business. The leverage is not in the form of a debt. You're not writing a debt. What you're really doing is you're collecting deposits from various deposit holders. You're of course responsible to them as a promoter of the bank, but you at least leveraging the balance sheet quite well. That will be one of the major attractions. With 11 or 12 rupees of an investment, you're carrying, let's say, a balance sheet of 100 rupees. So that could be a big attraction, quite honestly.
Corporate India's interest in banking is not new. If you see in the past, the Birlas had applied for banking, the Tatas had applied and then they withdrew. So why the interest? I think it's pretty obvious, because India is such a huge market. Where else do you get that kind of market? And it's still under-penetrated, still underserved market. Our bank are still, they're scratching in the surface, which is why you find that say DBS got itself locally incorporated a foreign bank and took over a bank here for the branch network. So it's simply the market.
A retail lending boom has been underway for some time now, with banks disbursing 10.9 trillion rupees in loans to retail borrowers between December 2020 and 2022, compared to 4.7 trillion rupees to industries during the same period. Indian corporates may be trying to cash in, as retail credit has ways to go before slowing down. There is room for growth too, since about 130 million Indians lacked access to formal banking at least till 2021, according to a World Bank report. But the RBI has not been keen on letting big businesses into the banking space. In November of 2021, the regulator had kept silent on its internal working group's proposal for granting banking licenses to big corporate houses. The cautious outlook is not new. Post-liberalization, licensing rounds for private banks were done in 1993, 2003-2004, and 2013-14. However, corporate houses did not find favor, even though the Bajaj Group, the Aditya Birla Group, and Anil Ambani's Reliance Capital had shown interest. Eventually, the on-tap licensing regime of universal banks was brought in 2016. But large industrial houses were excluded from its purview.
So if you are an industrial conglomerate or an industrial house and you have several businesses, these businesses have cyclical risks basically. They normally have problems with either liquidity, or they have problems with profitability or growth periodically. Now, the banking regulator wouldn't want, the liability to spill over, or those risks to spill over in the banking balance sheet. Because then in that case, unnecessarily, the deposit holders of the bank would suffer on account of, the promoter may be making no mistake. You would have very good governance, you would have practically, everything that is required to run a good bank. But at the same time, because industrial businesses, in any given sector, they are cyclical in nature. Periodically, they have their ups and their downs. And liquidity could become a major issue particularly during the downturn in the economy. liquidity does become a major problem. In such a scenario, there could be a systemic risk, but the regulator would like to avoid that. So,
the corporate interest in banking is not new, but they have not been allowed to enter into banking. And globally, if you see, there is no uniform rule. Certain countries have allowed the large corporations to enter, certain countries have not. There are the pros and cons. India has not yet made up its mind. So even if Mahindra wants to get into banking, as of now, it will not be able to go. At best, it can go up to 10%, not more than that.
Partly as a result of the current regulatory norms making it impossible for a business house to enter the banking space, the likes of the Adani Group, Reliance Industries Limited, and Godrej are making aggressive moves in the non-banking financial services space. And RIL's Jio Financial Services recently got valued at 1.66 trillion rupees, making it India's third biggest non-banking financial company. But could Indian corporates buying stakes in banks lead to concerns of backdoor entry into banking?
there is no such thing as back entry. There is entry, and if you cannot get into a banking sort of, kind of a permission or an approval from the regulator, there is no such thing as back entry in case of banking. I mean, any amount of, let's say, controlling interest in a bank, if you have, you cannot have it to begin with without the approval of the regulator. So to that extent, that back entry is denied. A fit and proper is even conducted for transfer of equity of a banking company by the regulator beyond a certain threshold sort of percentage. So in that case, there is no such thing as back entry.
While Indian business houses may find entering the banking sector an attractive bet amid the government's stress on increasing credit penetration and the rapid growth in digital banking services, concerns that this could lead to practices like connected lending and self-dealing are likely to keep a banking license out of their hands. Meanwhile, the RBI will also continue monitoring any significant stake buys by them in private banks.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She's working her way to the corner office. Business Standard.